Good evening, ladies and gentlemen, and welcome along to this IC Markets webinar, Trading the Range, Learning Support and Resistance Levels. My name's Chloe, I'm with Trade with Precision, and I'll be with you for the next hour or so going through the webinar. And please do, I love to keep these sessions as interactive as possible, so if you do have any questions, anything you specifically want me to cover, any markets that you particularly want me to look at, then of course feel free to drop those questions into the questions box. I'm more than happy to answer as many as I can get round to in the time that we have. A little bit of introduction about myself. I'm a trader based in London. I've been a trader for 12 years now, almost 12 years, and I am predominantly a technical trader, predominantly a trend or momentum based trader. So I trade in the overall direction of the larger momentum moves. So that's a little bit about me and my style of trading. Before we get started, I'd like to give you a quick moment to have a look through the risk disclaimer slide here. So have a look through this, have a read of it, make sure you agree with everything therein, and then we'll be able to get started with the webinar. Also like to take this opportunity to give you a moment to type into the questions box so that I can have some feedback on whether you can hear me okay and whether you can see my screen okay. So that would be fantastic if a couple of you could type into the questions box to confirm that. That would be great. Awesome stuff. Thanks, Steve. Thanks, Rachel. Thanks, Daniel. Brilliant stuff. All right, so that should be enough time to have looked at that risk disclaimer slide. So without further ado, let's move on then to have a look at the agenda for today. So first of all, we're going to do the majority, if not all of this webinar on the web-based platform. And we are going to start off by looking at how to identify support and resistance levels. Of course, we can't trade using support and resistance levels until we first of all can identify them, and it can take a little bit of practice, and I promise you practice is all it does take to start to see these levels with really quite a lot of clarity. So we'll have a look at that. We'll look at identifying ranges to trade between, and we can do that on higher timeframes and lower timeframes. So you know, I'll be led by you. If there's a particular time frame that you're interested in looking at, then please do let me know. And we'll look at setting up support and resistance levels on your graphs. So let's have a look then at the markets live. Bear with me while I just get the correct screen up for you. Okay, so you should now see the web-based platform up here. And first of all, very, very simply, I will take you through how to, just get this toolbar out of the way, how to put these support and resistance levels onto your charts. So the first thing that we need to do, hopefully you've all got this toolbar on the right-hand side, which gives you a few functions. We've got the cursor and the crosshair and things like that. Now, over on fifth item down in the list, we have got, if you just hover your mouse over, then this kind of drop-down menu will pop up. And the options to click on are trend line, horizontal line, vertical line, ray, and arrow line. And of course, we're talking about support and resistance levels. So we're talking about needing to draw horizontal lines. So I'm going to click on horizontal line, and that will turn my mouse looking at something like this. All I need to do is click on the chart, and that will put the horizontal level in an area that I want it. Now, I can now drag this level around, so I can move it up and down. I can set it at a specific level. So for example, if I want to set this at a particular price level, this is gold that we're looking at. If I want to set this horizontal line to say $2,000 per ounce, then if I've got this line selected, this menu should pop up here, and this little settings wheel, I can click on the settings wheel, and where it says price here, I can actually type in 2,000, click on OK, and that will move this line to $2,000 per ounce. So I can type in any number there and it will snap the line to the exact value that I want it to be. I can also, if I click on the settings again, I can click on lock, and that means that I won't be able to accidentally move the level, and I can unlock it. And the other thing I can do is I can change the line style, the line thickness here, so I can make it a really thick line or at least a little bit thicker. I can change the line style, so whether it's a dotted line or a dashed line or anything like that. And I can also change the line color. So if you want to have some kind of key, perhaps you want your support lines to all be red and your resistance lines to all be green or something like that, then you can change the color of those. So I'm just going to delete this line off because it wasn't one that I particularly wanted on. So just to delete the line, we can just come to the far right of this little pop-up menu and click on delete. You can also change the line type, the line thickness and the line color using this kind of quicker method over here. You don't have to go into the settings. So I'm going to delete that line off, and hopefully that just gives you an overview if you didn't already know how to do that. Then that's just a little bit of info so that we're all on the same page. We can all put these horizontal lines on our chart. So what I'd like to do now is just using gold, seeing as I'm on this chart to start with, just using gold as an example. How do we identify support and resistance levels? Well, I'll tell you what I personally do for my trading. Now, with my trading, I tend to trade, I trade intraday and end of day. So I do a lot of trading on the daily time frame. And it's absolutely essential for me if I'm trading on the daily time frame to know what's been going on for a significant period of time. I want to know what the major trend is and any major levels of support and resistance. And for that, I go up to the monthly time frame. So I always start my analysis on every instrument that I'm trading on the monthly time frame. Now, of course, I don't need to look at the monthly time frame every single day. I certainly don't look at the monthly time frame every single day. I will do a really thorough analysis once a month at the beginning of every month to check that I'm still in agreement with all of my levels. But of course, these levels, the horizontal levels, once they're drawn on the chart, they can stay there. So some of these levels I will have had on my chart for, some of these levels I'll show you in a minute. They've been on my chart since 2012 or thereabouts. So I'm just going to go up to the monthly chart now and show you here the horizontal levels that I have in. So I've marked in what was the all-time high. Back here, of course, it's been exceeded now, but previously for a long, long time, this was the all-time high. It was back in August 2011. That was previously the all-time high, and it stood as the all-time high until 2020. So for 9 years, that was the all-time high. So that's an important level for me, or it was an important level for me, because one can anticipate that there might be a reaction. If price reaches that all-time high again, there for sure will be people, if there had been buying opportunities up to that all-time high, there will be people wanting to take profits once price reaches that level, and therefore there will be a reaction at that level potentially. So that was an important level for me to have in based on the monthly time frame. And then the other important level for me to have in here is this $1,800 an ounce level. So if we look at that a little bit more closely over here, it's been pretty much hit 3 times. Now I've actually rounded up. I would have had the level a tiny bit lower, but I've rounded up to give me that round number, because round numbers are or can be very important in analysing charts and deciphering horizontal levels, because of course the number does correspond to a price per ounce, and people psychologically can react to these round numbers quite accurately. So that level there, $1,800, is where we had significant resistance throughout 2011, 2012, 2012 over here. So that is a strong level of monthly what was resistance, but of course once price reaches that level and exceeds that level, it can then become support. So an important thing to note as well about horizontal levels of support and resistance is if a resistance level is broken, it can become support, and vice versa. If the support level is broken, it can become resistance. So based on the monthly chart, I've also got a level of support down here. It's around $1,525, and we can see that throughout that time that resistance level was forming, price was also basically ping-ponging between these two levels, between 1,800 and 1,525. So you can see that support level down there. So those three levels for me have been drawn on my charts since 2012. In fact, since 2011, a couple of them. They didn't become relevant again until much more recently. But once price did reach those levels, if we just go up to the weekly chart here, you can see that price reacted. So when price reached that 1525 level, it reacted. There was some resistance there. Price broke through, it then reacted with support at that level. Price then broke through the next level of resistance pretty easily. Well, let's not forget that this was throughout the time of the coronavirus pandemic. So you know, fundamental things were at work here as well to help break through these levels. But since then, we can see that price has acted or price has reacted around these levels with some resistance, some support over here, some support, resistance. So we can see how those levels based on a monthly chart from back in 2011, 2012 have become relevant over here. Now, this is the weekly time frame now. So this time frame is where I get a picture of what levels are most relevant to price right now. There's no point looking at price 10 years ago if price right now is nowhere near that. So on a weekly time frame, I can get an idea of what is happening to price right now and where am I likely to find support and resistance. Let's just get back here. So on the weekly time frame, what I will tend to do is I will tend to do my monthly levels and make them a slightly thicker line, so that when I come back to the charts, I don't want to be redoing this all the time. When I come back to the charts and I turn my computer on, I know these thick lines are based on a monthly time frame. And then the thinner lines can be based on weekly or lower time frames. So the weekly chart here, I've got some resistance, some support, support. You'll notice that I'm not using, it's not an exact science, so I'm not using always the wicks or always the bodies of the candles. Sometimes my horizontal levels will go past the wicks of the candles. Sometimes it will be the bodies. Sometimes the line may skim through the tail or the wick of the candle, like you see here. So it's not an exact science, but basically the 1700 level, I can see there's been some resistance, some support here. Price is reacting at this level. I can see sellers strongly come into the market at this level for resistance. I can see also the buyers come into this market as this level acts as support several times over here. It's hit once, twice, 3 times just in this period here. The rule for me for a horizontal level is it needs to have been touched 2 times or more. So really for me, this horizontal level is in place. This is the first touch here. And then once I get, and I'm not going to call this particular area here a touch, because this actually a candle is closed below the level, so it's not a pure touch of the horizontal level. But over here we can see that price is closed on that level, opened on that level, and again closed above that level. So here is another touch. So by the time I've got these 2 touches in place, that's my horizontal level. So then a few days later it was touched again, and next time price came down to that level, it was touched and bounced from again. So that horizontal level is now in place. I anticipate that next time price reaches down to that level, it will again have some kind of reaction, a bounce. The buyers will potentially come into the market and see this as a suitable place to buy, or potentially just that the sellers who are in the market currently might want to take profits at this level. So once I have this roadmap drawn out of horizontal levels on the monthly time frame and horizontal levels on a weekly time frame, I can then start to build up a plan of what am I going to trade, how am I going to trade between these levels. Now, the title of the webinar is Trading the Range. So of course we are going to talk about how do we trade ranges in between these levels. But what I'm also going to talk about, because I feel it's important, is that we can trade trending strategies within these levels as well. Because while price may range, for example, between these 2 levels here, bearing in mind this is a weekly time frame, so where price is currently to this next support level, perhaps price is going to hit that level and then come back up, and maybe these 2 levels here. Let's just zoom in a little bit. So these 2 levels here where price is in between, one of them is potentially to act as resistance, one as support. So price could hit the support level, it could then bounce, it could come up, it could hit its head at the resistance level, and perhaps price could carry on for a period of time like that. One thing that might be tempting to do would be to set an order, a limit order, and buy when price hits the lower support level, and then sell when price hits the higher resistance level. And I'm sure there are some people that do that. I would, my personal opinion is that is a higher risk way of trading, because what we want to avoid is buying when price is falling, because we don't actually know for sure that that level is going to hold. While price is more likely to bounce from a strong horizontal level of support or resistance than it is to break, it is of course still possible that price could break. And what we don't want is to place a buy order at this level for the level to then go on and break, because then it's just money down the drain. We've instantly lost that particular trade. So I will always wait for confirmation of either a break or a bounce of any horizontal level. So in order to do that, I will go down to a lower time frame. So between these 2 levels here, this is 1750 and 1700. So there's a little way to trade between these 2 levels. If we go down to a daily time frame, for example, we can see the space to trade down here. So what's happened is price has actually come down and closed below this 1750 level. So this daily bar has closed below, and there has then been indecision. So there's a doji candle here. There's another candle that's very close to being a doji candle here. Certainly the market is taking a breath, having a pause. And so there's indecision here. Now, In terms of indecision, that doesn't mean we can't trade. It just means we have to plan what we're going to do when that indecision breaks out. So what I could do is I could have an order at the bottom of one of these indecision candles. Let's say this one, because it's the most recent one. I could have an order at the bottom of that candle. I could have a stop loss at the top of the candle, which is above my horizontal level of resistance. So it's protected by that horizontal level. And then if price comes below this candle, my trade will be entered. So it's only if the decision is made to the downside that my trade will be entered. If price continues being indecisive and just moves sideways, my trade won't be entered. If price comes upwards instead, my trade won't be entered. It's only if the decision is made downwards that my trade will be entered. Why do I want to trade downwards? Well, because we're below the resistance level, and also because the preceding trend is down. And as a trend trader, even when I'm talking about trading within ranges, I'm always interested in finding a trend within that and going in that direction. Now let's have a look at some of these questions now. Okay, so Krasimir, what is the percentage increase of the account for a year with this strategy? I have not actually taught you or really discussed a strategy with you right now. The percentage increase on account would obviously depend on how frequently you trade, what time frames you're trading, what risk you're placing on each trade. You know, everyone's personal circumstances will be different, so I can't tell you a percentage increase for the account for a year with what I'm talking about. I can go into more detail of strategy. I've only got an hour, so I can't teach you a full strategy. I can give you more of an idea of potential win rates and things like that for various strategies, but I can't give you a percentage increase of an account for a year because your trading will be different to my trading, which will be different to anyone else listening's trading. How can you avoid fake breakouts? Hopefully I've gone some way to answering that question. And do you put a buy or sell limit by breakout of the consolidation? So hopefully I've answered that, but let me just make sure I'm answering that. So for example, this level here, how do I avoid a fake break of the level? Well, what I do is I wait for price to break the level, and then I wait for the next candle and see what the next candle is doing. If that next candle just comes straight back up above the level again, then that was a fake breakout. If the next candle closes below again and is an indecision candle like this, then that gives me an opportunity to say, okay, if price continues down, then it might be headed down to this next support level. So if price continues down below this candle, I want to be in. So I'm going to place a sell stop order beneath the candle with my stop loss above the high. So it's a sell stop order that I want because I want price to come down through that level, down through the bottom of the candle in order to enter me in and take me down towards this next support level at 1700. Hope that makes sense. Okay, so looking at this level here, what are my other options? Well, my other options, if I want to trade in between, I'm calling this my range, the range that I want to trade between these two horizontal levels. My option is I can go down to a lower time frame. And on this lower time frame, it might become clearer what is available to me to trade. And this is where strategy comes in more to it, because what I want to do is I want to wait for the break of that level, and then I want to wait for evidence of trend continuation. So I've got moving averages on my chart here, and what I will tend to do is I'll wait for price to pull back into the area in and or around these two moving averages. This is my 10 and my 20 moving average. So I'll wait for price to get back into this area on whichever time frame I'm choosing to trade. So you'll notice that on the daily time frame, it's nowhere near those moving averages. So in terms of a strategy, what I've been talking about so far is just a theory of, look, how do we potentially trade between these ranges? And one way to do it is to use these indecision candles potentially once price gets below. But perhaps there's not going to be an indecision candle. Perhaps price broke below this level and it's going to just continue on. So there we need a strategy for a continuation of this move from one horizontal level to another. So I would be waiting for a pullback into these moving averages, and then I am waiting again for confirmation. I always want to have confirmation. So I'm waiting for a pullback into the moving averages. I want my level of resistance to be hit as well, preferably, and I want to see some kind of bearish reaction from that level. So over here, I've got a bearish reaction. That's a reasonably bearish candle. That's a bearish candle there. We've got a couple of kind of bearish candles here, but really I want my stop loss to be above the top of that range, and my entry to be below the bearish candle that I see on the time frame that I'm trading. So something like this candle here. Now, if price moves down here, then perhaps there'll be another pullback and another move down, and I'll simply use then we're talking about trading a trend rather than trading bounce from a level. But in order to trade a range, so the range is from this level here to potentially down here, I want to take every opportunity I can to get into this market between where I believe price has come from, or where price has come from, to where I believe price is going. So if there is another opportunity to trade, if price pulls back into the moving averages again at this point here, then I'll again be looking for a bearish candle, stop loss above the high, entry below the low to trade it down to that level. That's not the best example because it wouldn't actually have a fantastic reward to risk on that particular example. Okay, just covering the questions. Question, are they the simple moving averages or exponential moving averages? Brilliant question. I tend to use exponential moving averages. Now, I'm not using the moving averages as an exact buy or sell point. So for that reason, it's not critical whether you choose simple moving averages or exponential moving averages, because I'm just looking for price to be in the area around these two moving averages, but I use exponential. Daniel, is there a rule that I apply with regards to how far I zoom out in order to place support and resistance lines? Good question there as well. There isn't an exact rule. All I would say is what I do is I start on the daily time frame and I look at where is price on the daily time frame. Now, if I can see enough information on the daily time frame for me to see, right, okay, I can see there's a support level down here, support over here, I can see resistance over here. So I've got a few levels in. But really, in all honesty, I will always go to the monthly time frame, and it will depend on the instrument, depend on the currency or the commodity or whatever it is that I'm trading as to how far back I'm going to have to go. It just so happens that approximately 10 years ago was when price was last in the vicinity, if you see what I mean. So back in 2011, 2012, 2013, price was over here. And it's been 10 years since price has been here. So that's how far I've had to go back in order to get these levels in place. Because all of this price action in between that time is kind of irrelevant to where price currently is. But it might be that on, I don't know, maybe Australian dollar, for example, how far do I have to go back? Well, I'll always just go to the monthly time frame. How far do I have to go back to see when was price last in this area? Well, it was last in this area over here in 2020. Before then, it was 2008 or thereabouts. And over here as well, so 2016 or thereabouts. So I don't necessarily have to go all the way back. What I tend to do is just scrunch up the chart to give me all the information and draw in the most important, the most relevant horizontal levels to me. Because they're horizontal levels, they never change. So you're not wasting your time going as far back as possible on your charts. What you don't want to do is have millions of horizontal lines. You want to pick out the most relevant. If I'm going back on the monthly time frame now, then I want to pick major highs, major lows, levels that have been strongly reacted to, so that I don't end up with just zillions of lines on my charts that can be too confusing. But if there is, if there is strong resistance at this level here, 0.8, then there was strong resistance back in 1997. There was strong resistance back in 2003, 2005. It's likely that there will still be strong resistance now. So having gone back all this time, you haven't wasted time in doing that, because it's likely because the level is 0.8 and that's never going to change. There's always going to be a level there. There's not going to come a time where people are just going to say, do you know what, let's erase that 0.8 level. I'm sick of seeing the charts react against that. Let's choose a different level. That's not how it works. So as far back as you want to go, but I always recommend going back as far as you possibly can. In answer to the question, yes, my moving averages, the black one is 10, the blue one is 20, the red one is the 50 moving average. And I use those when I'm looking for trend trading opportunities. So I use the moving averages, the 10 and 20 as the kind of area of equilibrium that I'm looking for the market to come back to for my area of bounce. And then the 50 moving average, or the 3 moving averages, in fact, I often use the 200 as well. When I'm looking at trend, for example, here, I like to see the moving averages pointing in the correct direction of that trend and kind of fanning out in this order. And that gives me an indication that the trend is potentially quite strong at that point in time. Getting to as many of these questions as I can. What's the lowest time frame I would trade? I personally trade down to the 15-minute time frame. Again, it's personal preference. I know people who trade lower time frames than that. I don't choose to because I find it a bit stressful, to be honest. So I trade daily time frame, I trade 4-hourly, hourly, and 15-minute time frame. Those are my main time frames that I trade. So I hope I haven't missed anyone's questions there. If you've asked a question already and I haven't answered it, then do feel free to put it back in the box. So we'll go back to gold, and just to point out that, so this is my next level of support here. I'm back on the monthly, but let's go back to the daily. This is my next level of support. I'm looking for price to head down to there, but if price breaks down through that level, next level of support is, I know I moved that a little bit, it was at 1525. That's the next level of support. So price could range between levels of support and resistance, but I'm always looking for what happens next, what happens if price breaks. So at the level of support over here. Let's see if I can. What I'll be looking for is evidence of, so as price comes down here, we get seller candle, seller candle, seller candle, seller candle as price comes down. And then how do I know whether price is going to bounce or break? Well, the answer to that is I wait for price to hit this horizontal level and I see if it's going to break. And then perhaps it might just go straight through, or it might spend some time consolidating and I might get another indecision area, or it might, perhaps I'm going to get a true kind of break and then retest of that area, in which case I can be fairly sure that price is going to head downwards further. Now, if price is going to bounce, then I would be expecting price to bounce either with one candle, perhaps a long-tailed candle, something like that, and then for price to come back up above the high of this candle here, in which case perhaps it could be headed back up to this horizontal level here. So I'm always looking at the candles to indicate which direction price is going. Now, you might think, well, it's very hard to trade this if you're always waiting for a candle, because you're missing a lot of the move. Because if I wait for price to hit this level and then bounce, then I'm missing a lot of pips over here while I'm waiting for my candles to close. But don't forget, we can always go down to a lower time frame in order to see this happen. So let's see if I can think of an example of another level that's just broken, maybe euro dollar. So euro dollar here, there was a strong horizontal level of support around 1.05. That was a strong level of support, which initially held just here, but it has just today really broken through. Not today, sorry, it's the last few days. So here's where it was support. There are a couple of false breaks as well. Now you'll notice here that with this break here, waiting for the candle to close, waiting for the next candle, and then the next candle after that comes up above the high. So that's an indication that price is coming back up towards the horizontal level. What I would then be looking for is that going to bounce or break? It broke through, so that means that that is a false break of that level overall. It didn't break down, it false broke down and then came back up. Next time, same thing. This time here, this is where we get the close below, then price immediately carries down with lower lows down here, slight indecision, and then away we go. So there's no pullback to retest that level. If there had been, then I would have been looking for a bearish entry at or around the level. But actually, price has just continued downward. But that's the daily time frame. Could this have been tradable perhaps on the hourly time frame or 4-hourly time frame? We're looking for the break below and then a pullback into the moving averages in order to get into this. Probably 4-hourly time frame might look a little bit better. So here is the break below, then pull back into the moving averages, bearish candles, potential entry over here as well. This is a bearish, or almost a bearish engulfing candle. Nice opportunity potentially to enter there. And then all the way along here, each time price gets back into the region of those moving averages, one can potentially continue trading short, because the next, now that this horizontal level has been broken, the next horizontal level is all the way down here. So in terms of what range are we potentially looking to trade now, that's where we have to go back in time. So probably up to the monthly time frame. Where is price headed? For that, I need to go back to 2001 over here. That's the last time that price gave me some, that's the last time price was down this low. And so I need to look back that far to see where was it the price was reacting at that time. So this is where I've got this horizontal level. Here it was resistance back in 2001. Below that, it would be all the way down here, but that's a little way away. So this horizontal level here, resistance, it's also been support once that was broken. That's where I'm anticipating price potentially heading down towards. So I'm now trading a range between the horizontal level that's just broken and this next horizontal level down here. I will be trading the range, but I will be trading it in the direction of the overall trend. This is a monthly downtrend here, so it would be this is strong momentum to the downside. So the safest and most highly probable trades will be in the direction of that trend. Yes, price will pull back on occasion, but the largest moves will be in the direction of that downtrend. So that's where I want to be trading. Checking the questions here. All right, so is there a market that you would like me to look at? And okay, Bitcoin. Let's see if I've got Bitcoin open already up here. I don't, that's strange. Thought I would have. Okay, I don't have Bitcoin open, so let's. That's a good excuse to start from scratch. So I'm going to look under cryptocurrencies over here, Bitcoin. I'm going to just go to new chart. Gives me the kind of default. I'm going to load my template up. This one here. Okay, so that just gives me, in fact, you know what, we don't even really need the template I've got in order to talk about horizontal levels of support and resistance. But so let's start from scratch with this one then. Let's go up to the monthly time frame on Bitcoin. Get rid of that. Monthly time frame on Bitcoin, and then I'm going to start by drawing in my key horizontal levels. So up here, horizontal line. Now price has come massively down here. So this level here, this previous high level, is basically what I want is anything that might cause a reaction. So one thing I did mention was a horizontal level of support and or resistance doesn't become a horizontal level until it has had 2 or more touches. Now this level here that I've just drawn in doesn't have 2 or more touches, certainly not on the monthly time frame. But you know, Bitcoin is a relatively new thing to trade in the big scheme of things. So we don't have much historical data, and it has basically come from 0 value all the way up to several $1,000s in value. So it's understandable that I might have to use levels that don't necessarily yet have 2 touches. But nonetheless, there was a strong reaction at that level, so I am seeing that as potentially significant. Now, I'm also going to draw this previous all-time high in as well, this one over here from 2017. So those are 2 levels that are highly significant for Bitcoin. I'm also going to draw this low here because there was a strong reaction at that low, and so I want that level in there. So there's the low. I'm going to do the thing that I said that I did for the monthly levels, which is make them a little bit thicker. Now, quite simply with this Bitcoin chart, let's go to the weekly time frame. quite simply, there is not much support in between where price currently is and this next level down here. So I've got the previous all-time high from 2017, and then I've got this high that was reacted quite strongly at. On the weekly time frame, I can draw a few more levels here. So I've got support over here with this touch here and this support over here. I've got another level which at the time was the approximately the cost of Bitcoin mining at this time. That's why that was such a strong horizontal level at that time, because the cost of mining Bitcoin was, I think it was around 6,000 or something like that at the time. So there was a lot of support there. It broke down, but price reasonably quickly got back above the level, and once it did get back above that level, it was into a strong uptrend. But that's all I really have to go on Bitcoin. So it's not really a lesson in true support and resistance, because true support and resistance, I do need to see at least 2 touches. Now, what I mean by touches is I need to see price hit and react from that level in terms of candles. So I could go down to the daily time frame for this. So price has come up to this level, reacted from it, and moved away. Over here, we just about can see on this daily time frame that price has come up to this level, reacted, moved away. So we could just about call it 2 touches. But if I'm honest, this isn't really the kind of reaction that I would go for if I'm drawing horizontal support and resistance. What I would be looking for would be price to come up to this level and react, you know, fairly strongly, move away from that level. Whereas over here, yes, price has reacted a little bit, but really it's just kind of consolidated underneath that area before moving off. So in the traditional sense of support and resistance, I would say these levels are pushing it a little bit, but with regards to Bitcoin and in fact every other cryptocurrency that one might be able to trade, we're going to have to use our discretion for the horizontal levels, because it might be that they don't have as many touches as we would like. So what's happening right now with Bitcoin? Well, price is sitting just above this horizontal level of support, and it is actually finding support at this level. Now, this was a level that I drew on based on the monthly chart. I'm now looking at the daily chart, and we can see how price is held up by this level. So yes, we could trade the range. So we could trade basically from these lows down here up to the top of the range, i.e. the next level of resistance up. However, what I see currently on Bitcoin is an overwhelming downtrend. And so I would be quite reluctant to trade long on this unless I see a change in price action. Now, this is something else that we could have a bit of a talk about. Is over here, I've got lower highs and lower lows in this downtrend. So we can see here, lower highs, lower lows. Now, these lows here, this, if I just draw what I'm looking at here, what I would need to see in order to trade long on this, I would need to see a higher low. And if I see a higher low here on this daily time frame, then perhaps on a lower time frame, I might be able to trade long back up to the top of that range. So talking about looking for chart patterns as well, this would look a bit like an inverted head and shoulders pattern. Left hand shoulder here, head down here, right hand shoulder here. If I were to see something like that, then when the neckline of that pattern, i.e. the highs over here were to be broken, then I would be looking for an opportunity to trade that long, probably on a lower time frame. That's what I would need to see in order to trade back to the top of this range in the upwards direction. If I don't see that, then I will simply be waiting to look for a breakdown of this horizontal level here. Now, chances are price could break through and just go like it did here. There might not be an opportunity to sell that, but for myself, where my trading is my income, I have to err on the side of caution. I don't want to just guess that price is going to go down. I want to wait for a break of this level and then confirmation, whether that is a continuation bar by bar like that, or whether that is a retest of that level and then a continuation. But I have to wait for price to break through that level before I can then trade down to the next horizontal level of support. So what I will be doing is, as soon as, if price does break through this level, as soon as it does break through this level, that's when I will go to my lower time frames, and I will then look for price to, let's go to a lower time frame here, so maybe the 4 hourly. If price breaks down below this level here on the, then I'll look to the 4 hourly time frame and look for some kind of pullback. So it happened over here, and actually there wasn't a good entry opportunity, but perhaps next time it breaks through, maybe that's the time that it will break through, it'll close below, it'll pull back, it'll bounce from, and then I maybe will get some kind of bearish candlestick like that. Maybe it'll be a 2-bar candlestick pattern where I've got a strong bearish, if that one was green and this one's red, strong bearish, there we go, strong bearish candle, something like that in this area. And then that's the time that I would be looking to enter a sell stop beneath the low of one of these patterns, with my stop loss above the high and above the horizontal level, preferably. And then I would take that trade down, and not necessarily all the way down to the bottom in one hit. So I wouldn't necessarily just leave it to run down to here. I would probably scale out of the position potentially. So perhaps go for a 1-to-1 reward to risk target and scale out a third of the position at that point, 2-to-1 scale out a third, 3-to-1 scale out a third, etc. Or alternatively, could, assuming that the trend will continue down like that, perhaps trailing the stops down above the highs in the swings in price action. So there are so many options, and I'm really sorry that the hour is not long enough to really get to the nitty-gritty of a strategy and exactly how I would manage the trades and things like that. But I hope that's given you some idea of certainly how to identify these horizontal levels and how to then trade in between them. Let's just see if we've got any more questions. Quick look at Euro Swiss. Euro Swiss is actually a really good one to use for horizontal levels, because price on Euro Swiss tends to really respect those horizontal levels. So let me just have a very quick look at this. So Euro Swiss, I'm going to go up to the monthly time frame. And I'm going to put this level of support down here. Now, these spikes in price action were caused by interventions. So you'll perhaps remember the intervention where the euro, the Swiss franc used to be pegged to the euro at 1.2, and there was a time when the Swiss National Bank decided to unpeg that, and so there was a massive move in the market that was very unprecedented, and that's what this massive spike is here. Previous to that, this was the decision that was made when they did decide to peg that to not go lower than 1.2. So again, that was a Swiss National Bank intervention. So I don't necessarily use the absolute spikes, the absolute wicks as a candles for that, especially if I have then got later information that gives me a more accurate area to have that level. So here on the weekly time frame, we can see that actually that support is more around this level, so it's around 1.02. So that's why I've got this level here rather than at the very wick of the candle. So on this weekly time frame, I can then go and draw some more relevant levels. Now that was resistance over here, then became support just here, and resistance again more recently. There isn't an awful lot I can do with where price currently is in terms of levels of support, because I mean all I can do is use those wicks. But that again is not going to be a true level of support because there is only that one touch down there. I don't have much else to go on. This level that price is currently at, down here, there's also been some reaction at that level, so I would have that currently where pretty close to where price currently is actually. So those are the levels that I would have drawn in on Euro Swiss. Now I would expect or anticipate the potential for Euro Swiss to come down to this horizontal level. Let's go to the daily time frame. Come down to this horizontal level here. If I was in any short positions on Euro Swiss, I would be just keeping an eye out at this level to see how price is going to react. If it reacts strongly bullishly, then obviously I want to protect or close or scale out of some of those positions. In terms of where to go next, I'd be looking at this level for a potential break, and if price breaks through this level, there's not much in the way in terms of horizontal levels down to here. So it would have to be strategy based where profit would be taken if there are any short opportunities down here if this horizontal level does break. So that is relevant to recent price. Now if we look at historical price, if I go back up to the weekly time frame here and we look at historical price, we can see how you know, I can draw this horizontal level in here, and then I can see that price acts as this level acts as support again. So I've got this touch over here, and then support, almost resistance all the way over here. There are really nice opportunities if we just keep an eye on all the support and resistance levels here. Support. Price didn't quite make it down there, but then it's acted as resistance along here as well. Support. So Euro Swiss is a really nice example to use. Let me just go back to the presentation very briefly. So I'm really sorry that we're going to have to stop there, but we've hit the top of the hour. That's all we're going to have time for this evening. I hope you found it useful. Please do get in touch with they've got a fantastic customer support team at IC Markets. So if you do have any questions about anything at all, then you can email them. The email address is up there in the top right hand corner. They've also got people at the end of the phone. If you'd prefer to speak to someone over the phone, then there's a phone number there for you. All the usual socials, Twitter, Instagram, Facebook. You can follow them on there. And I'm not personally on at the same time every week, but yes, we do plenty of these webinars. So please do email customer services and they'll make sure to let you know which webinars we've got coming up that you can register yourselves for. Love to see some of your faces in the room next time around. And of course, if you've got any requests of what you would like any webinars to cover, any topics, we're more than happy to do that for you if you just drop them a note. So it has been an absolute pleasure. Sorry, my voice has gone a little bit croaky. I do hope to speak to you at some time in the not too distant future. Cheers, everyone. Have a wonderful evening.